What's up, peeps? Welcome back to Viva La Coin. I'm Joe. I will be your host for today. And now that we've covered the basics of blockchain and what is Bitcoin and how to buy it, it's time to get a little bit into the weeds and discuss what is decentralized finance in general and what are all these other altcoins that I'm sure you see on the different exchanges or in the news, including notable ones like Ethereum and Dogecoin, of course. What utility cases do they serve? Are they all just carbon copies of Bitcoin? And what exactly will the future of decentralized finance look like with the incorporation of these other projects? Now, to clarify again, I am by no means a financial advisor. So if you view this as financial advice, do not. Go talk to your financial advisor about altcoins, and I'm sure they'll have a plethora of in-depth and well-researched information for you to gnaw upon. But what I want to do first is jump into just a very basic overview of a couple different concepts behind DeFi. Now, hopefully you can see this whole screen. I'm not blocking too much of it. There was a nice visual on thevisualcapitalist.com that I wanted to share. But just like Bitcoin, any other altcoin that may be utilized by the public, they share several different similarities. And to give a brief overview of the financial system, what I want you to think of is when you currently go to your bank, let's say you use Bank of America. So you have the actual asset that you spend and stores your value. You have transaction mechanisms such as Visa or MasterCard. You have different creditors or lines of credit depending on if you use other banks. You have different ways to make those payments such as PayPal, Square, and Venmo. And the list goes on and on and on. Finance isn't just the asset itself or your store of wealth, but it's also how it interacts within that system and how accessible it is to you to both make payments and to store it securely. So a couple key characteristics of decentralized finance is first and foremost, the system in which you operate is permissionless. And that means that no matter how poor you are, no matter where you live, no matter if your government hates the fact that you may have a little bit of freedom away from being suppressed in their authoritarian rule, doesn't matter. As long as you have access to the internet and a smart device or a phone, you can access your banking capabilities. Secondly, decentralization. Now that we covered in the Bitcoin video, but essentially all of the records and all of the network power are broken up amongst every computer within the network. So there isn't one person or one organization or one entity that can go in and forge false information, manipulate the market, block transactions, and all of those servers together verify whatever utility function that alternative coin, or even in Bitcoin's case, is set to do. Next, and this is the one I hope you see, it's trustless. And that doesn't mean lacking trust. That just means it doesn't rely on it. Whenever I do anything in the banking world or in the current centralized financial world, I have to rely on either the banks or the third-party individuals, or even if it's an app like Venmo, I have to rely on them putting that transaction through in the monetary value that it is supposed to be. Systems are hacked, systems go down. We just saw yesterday on CNBC, they were reporting that the Fed had their whole banking network go down. So it happens. Now, when you're relying on a trustless system, you don't have to worry about someone blocking your payments, someone taking additional fees. If you're sending it cross-border, you don't have to worry if that other country is going to accept it or not. You can go directly peer-to-peer, and it's backed up by algorithms and cryptography as opposed to banks or middlemen that could manipulate that transaction or say, oh, it's not valid or we're not putting it through. Next, it's transparent. So most cryptocurrencies, you'll be able to see whatever is going on in the network, not your personal address or your social security number, just what wallet address is sending whatever cryptocurrency or funds, what wallet is receiving it, and the total amount. Now, you may think, well, that isn't private, but it is anonymous. The whole point of this isn't to not regulate a certain system or make sure that we're not using it for a bunch of nefarious activity or to supply like terrorism or crazy things that you'll hear them say in the news. That's why people like having it be anonymous. This is more or less so that you can send stuff peer to peer without that other information factoring into those decisions that are being made. It is your decision to send those funds to someone else. However, we can keep track of the amounts that are moving. It is censorship resistance, which anytime you look at the news and you go back to Twitter, right, and they ban President Trump, I'm not giving my opinion on that because, quite frankly, I am too excited about this to care about fighting about that in the comments or with anyone. But the point of it is, if you have a certain opinion or you feel a certain type of way, you may be blocked from a server or a chat room. Now, in his case, there were other stipulations as far as insurrections and whatnot. But you see all over the world in real cases, let's say in China, when they have people in Hong Kong fighting for their independence from the main country of China, or you see people in certain Middle East or African countries trying to point out corruption in the government, such as in Nigeria, and they're blocking them putting out those articles or imprisoning journalists. Well, now you can't take their site down. You can't block it because you can build upon the blockchain networks and create websites or businesses or share your thoughts and ideas or innovations without having to worry about them being blocked by someone who may not benefit from that because they already control the narrative or the system or the business conglomerates of the world. And then finally, they're programmable. So most of these blockchains that we're going to be looking at, they have the ability to continuously upgrade, have additional layers added to them, just like the internet when it was first created, back when it was predominantly useless and it took 30 minutes to send an email and you couldn't even watch videos on your computer. You couldn't do any of that. We have now gotten to the point where it's lightning fast and you have a supercomputer in your pocket. These things develop over time. So many of these projects and programs and networks are liable to continue to expand and scale with decentralized finance as more funding and more institutions and more interoperability are added to that network. So when we look at different types of cryptocurrency, I mentioned earlier that altcoins aren't just different versions of Bitcoin and they serve their own functions. Now, each one could have its own video, and in many of the main cryptocurrencies that you're going to see probably in the top 50 on an exchange, I'm going to do separate individual videos for them. It is too much to unload onto everyone in a singular video. What I want to talk more about is just use cases and how they vary from one to another. So this is on Kraken's website. Actually, it's one of the exchanges that I use, and I'm going to do an exchange video on them coming up here shortly. But they actually have a tab to help beginners with different types of cryptocurrency. And they start out by breaking down a few key characteristics or differences about those cryptocurrencies. So there are certain cryptos that are used specifically for payments. So the main one that everyone knows of is Bitcoin. However, in recent times, it's being viewed more as a store of value as opposed to spending it or transacting with it because it's still very slow without the additional second, third layer solutions on top of it. And quite frankly, I'm not going to spend X amount of Bitcoin to buy a pair of shoes when that Bitcoin is going to be worth significantly more in the near future. So it's not necessarily going to be used as a payment system before store of value as it's in that price discovery. But a few other ones that are pretty notable that people have pointed out, like Litecoin, it was originally designed to be a silver to Bitcoin's gold. I'm not a fan of Litecoin. I have my own opinions on it, which I'm going to break down in its own video. But most of these cryptos are meant to be payment systems. Now, some differentiate themselves, like Monero or Dash, because they tout an additional level of privacy to where I mentioned before, you can see what wallet sends a cryptocurrency to another wallet. Well, those cryptos are specifically designed to block that information from being public. Now, although it probably does have its use cases here and there, as you can imagine, with broad scale, let's say, acceptance of cryptocurrency, that's going to be a much, much harder one to get past the regulatory bodies in hand. They're not going to say, well, we finally are coming around to this whole crypto thing, but sure, fuck it, block all the information so we can't track any of it. I think that would cause more problems than it would get us through the door moving forward. And then you can even have smaller ones like Dogecoin that you can send as a payment, but it doesn't really have any special function or utility. It's not scarce like Bitcoin. It's not semi-scarce like Litecoin. It's not private like Monero. It just has an infinite supply that can be minted and bought and sold. And as that supply that's currently available decreases, it will go up in value. But ultimately, it's referred to in the community as a shitcoin. And in my opinion, most cryptocurrencies are shitcoins. They are either early projects that were never followed through on from the big boom back in 2017, 2018, or they're being eclipsed by much better versions of those projects currently being developed. So being able to differentiate which ones are going to win in their respective fields is an important thing that I look for, and what I'm going to be covering when I do each one's individual video and why I see the use case for them. Now, the second and probably the other largest category that you would have been familiar with if you've looked into cryptocurrency for more than an hour. I'm sure everyone that has done a little bit of research has heard of Ethereum. So Ethereum is a network that is decentralized, and it is, imagine the internet, except instead of people owning like Facebook, like a Mark Zuckerberg owns Facebook, they can sort of mitigate what gets posted, what they want to take down, what they'll allow, what they won't allow. On Ethereum, you can build decentralized websites and applications and have different functions on there, including businesses that aren't able to be manipulated, shut down, censored, or any one of those sort of frustrations that people face. When you're building out these networks, if you think back to when I was talking about blockchain being almost like the platform and Bitcoin as the product, imagine the Ethereum network is the application itself. Now, there's no one that runs the network. The nodes on all the computers and all the different hardware and software, it runs itself. But in order to pay to build on it and to operate it, that's what the Ethereum tokens are for. When you're buying and selling Ethereum, it is essentially the fuel that runs that network. It is what it incentivizes the computers to complete those tasks, which is what gives Ethereum its value. And that is its own probably whole video series, because I have my own thoughts on Ethereum, its scalability, some of the problems that they were having over the past few months. In some of the other major ones that I'm going to be covering are Cardano, Polkadot, Kusama, probably Cosmos, and I like Icon. But each one of these networks operates differently. They all have their own blockchain and white paper that if you dig deeper into any of these or go onto any of the sites, you can click into them and do your own research. But more or less, these networks are going to be the backbone of the DeFi world. And you're really going to see some of their value and utility cases even expand beyond Bitcoin's capability, especially if it only remains a store of value for the gold cap and it doesn't expand beyond to other currencies. You have different financial cryptocurrencies. So probably the biggest one I like here is Compound and maybe Synthetics. But what these are is when you go to a bank and let's say you go in and you want to get a loan. Well, you're at the mercy of your bank to get that loan. So if your credit isn't good enough, if you already had a different loan out, maybe you can't afford the rates that they give you, etc. There are plenty of reasons as to why you might not be able to be approved for a house loan or a school loan or anything in between. Well, now in a decentralized peer-to-peer environment, let's say with Compound, I could go and post my Compound up and say, I want to give a loan out and here are my different parameters for what I believe the the percentages are that you're going to pay back in interest. And here's what I believe the timeline should be. And the smart contracts behind that will help to execute it. And people can seek out better financial opportunities for themselves if they need to find funding based upon that peer-to-peer interaction. Now, I mentioned smart contracts, and I'm going to be mentioning smart contracts a lot. So I figured I would just take 1 second to touch on that. So when you have computers completing these tasks, whether it is a payment transaction, some financial borrowing or lending, a network application, you are executing smart contracts. The computers are pushing it through in that trustless system. And the closest example I can give, and the best one I've heard, was think of it almost like a vending machine. So when you go and you have your quarter, let's say, and you put it in the vending machine, imagine that like your Ethereum token. You put it in. So you can then punch in the numbers as to what you want to order and it'll, drop it out and you can take it. So that machine, it didn't have someone from, Coca-Cola or someone operating it behind the scenes. It was programmed that based upon the funds added, it was going to produce a particular task and then generate whatever it was going to give you. Those contracts operate much the same depending on how they're broken down. And if that's still a little confusing, I know there's so much behind it that I'm just trying to give the most surface level version of this that I can. But it'll come with time. You have different ones that will cover Oracle services. So Chainlink is the biggest one that does those tie-ins, but this is for handling all of the enterprise data. So when you have these massive companies syncing up all these bank profiles and all these different services, they're going to need to be able to track different identities or different information or totals or limits. So these different altcoins are better ways to be second and third layer solutions on top of whatever network they're in to help enable the tracking of all that information. Now, I personally will be doing a separate video on Chainlink. I think that they have already won that space, in my opinion, but there are a couple other interesting ones that are coming out, and you'll see that whether it is a network token like Ethereum, they'll always have competition from another better, newer cryptocurrency coming up because everyone is still in a functionality and price discovery period. So it really is down to research and development that is going to differentiate them and where I'm going to put my money and what I think is going to be the victorious one coming out of this. There's only one example on Kraken's site about multimedia in crypto, but you're going to see a big adoption of cryptocurrency in the gaming space and in the YouTube virtual media space. And basic attention token, just to give you an idea of what this does, is it actually pays out the users for using a certain browser. It's referred to as the Brave browser. It's actually one of the bigger use cases for crypto currently. And if you're on that Brave browser, just like your Google browser, and you watch certain advertisements as they come up while you do your tasks, you actually earn crypto and you get paid that way. So it's an interesting way to try and incorporate cryptocurrency into our everyday tasks. And I think that that's only going to explode once you get a tie-in with esports and all those gamers. And Samsung actually already has a partnership with another crypto called Engine that is geared towards esports. But I'm going to be covering them in a separate video. This is a website that I use. It's called DeFi Pulse. And I can put this in the description for you if you want to go and play around with it. This just breaks down just on the Ethereum network, all of the different DeFi projects, what their specific functions are, the total amount of locked value. And you can see it took a little bit of a dip there just because we had Bitcoin currently going through that correctional period at the end of the month with CME futures ending today, actually, 226. But if you go down, you'll be able to see all of the major cryptocurrencies that you will see on Coinbase or Binance US or Kraken or whatever exchange you choose to use, except ranked out based on the amount of money in US dollars that are locked up in these projects, which means they are actively being used. So $5.9 billion is currently being used in a cryptocurrency known as Maker. And I'm not going to go into specifically what it does, but it does have to do with lending. And it will break them down by different categories. So you even go a little bit further than the very, very base level categories I was showing you before on Kraken site for beginners. You have different cryptocurrencies for lending, which Compound was one of those ones that I pointed out earlier. Decentralized exchanges are another big one. This is a separate video in and of itself, but the stock exchange, if you think about it in centralized finance, is a place where people can go to trade different stocks and to buy different options. Well, a DEX or a decentralized exchange is the same thing on the internet, except you are just doing it peer-to-peer through that decentralized exchange or through those computers. It's not going through a middleman or a third party. It's not like buying Bitcoin from Coinbase because they are still a US-based company. The decentralized exchanges run completely off of that decentralized network. And it's a really good way to find a lot of the altcoins that aren't available on some of the major exchanges. It can get very expensive at times just because the fees are so much higher, especially when you're dealing with the Ethereum blockchain. So I wouldn't explore that too much until we cover a little bit more info on it, or if you're already experienced. Altcoins also cover derivatives. So derivatives in centralized finance, it's more or less you're taking a certain stock that you believe is going up or down, you're longing or shorting it, and you're amplifying the amount, or you're replacing a certain asset or doubling down or using leverage. In this case, you can replace, synthetics is the number one, but you can replace certain assets with that in order to achieve a certain goal or a certain transaction. I don't really mess with derivatives at all. It's not really my forte. I'm not going to claim to know everything about derivatives. That is just something that I can honestly say. Again, I'm not a financial advisor, but I know it's going to have a very large impact in decentralized finance. And I do know enough about synthetics. I can do a video on them, but not enough to do any type of deep dive right now. You have different second, third layer solutions that help with payments. One I'm a big fan of, and I own a decent amount of, is Matic. It is built on top of the Ethereum network, and it allows the transactions or the overall movement of the Ethereum network to expand and to scale. Ethereum has had several issues as of late, and to not go too deep into it, it has to do with its ability to scale and the increasing in fees, the more congested it gets. And some of these additional payment solutions help with that. And then finally, just certain items to help with asset management. And I'll give you an example of, let's say, Ren is a pretty popular one. It can cover or wrap, essentially, WRAP, Bitcoin or maybe other cryptocurrencies, so it can interact with the Ethereum network even though it's a different blockchain. So think about it like a USB adapter where, oh, I don't have a USB-C, plug on the adapter and then you can use it in the network. That is what Ren essentially does. But there are different ones focused on yield farming or increased percentages of staked assets that you can get back. But that's for another video. And one other one that I wanted to point out, one of my long-term favorites, and I've been buying them since 2017, is VeChain. They are one of the most real-life applicable versions of a cryptocurrency that are actively being used. So they deal with supply chain. So what they do is they help with tracking certain goods and services throughout the entire life cycle of when someone would buy supplies until it arrives, until you build something, and then all the way back to whoever sold it in those smart contracts. Now, one of their most recent use cases was they were being used in Cyprus and parts of Italy to track COVID-19 vaccines because they're so short in supply and it's so difficult to make sure that they stay at the right temperature, they arrive to the right place, and who is taking them. Those are the cases where you need an infallible system. This can't be one of those things where we're just sitting there and saying, well, I think that those other 2 million vaccines are just rotting in a truck somewhere in a parking lot. You can track everything here, and this will have larger implications when it comes to tracking, let's say, individuals for voter ID. We just had a massive election where everyone was complaining about who was voting, what was fraudulent. Well, things like blockchain can take that guesswork or bias out of it and help to track all of those votes or, who is participating within a certain system without corrupting it. And I think that VeChain in the long run is going to be one of those ones that I'll hold for a third or a fourth 4-year cycle. Because whether it's BMW that partnered with them, Walmart over in China partnered with them, as everything opens back up for them, their use case is only going to expand. And then one other type of altcoin I want to cover is they're referred to as stablecoins. And stablecoins essentially hold $1 value. So if I have $1,000 worth of Bitcoin, I can convert my Bitcoin, just like I showed you in our Coinbase video, to USDC, let's say. And USDC is pegged to the US dollar. So I would buy 1,000 USDC coins. And then let's say we had a day where Bitcoin drops by a couple $1,000s, like it did over the past couple days. Well, my USDC is still worth $1,000 because it doesn't go up or down with Bitcoin's price. It's pegged to the US dollar. So stablecoins are an important part of the ecosystem because it helps not only avoid volatility, but most of the time you'll also get a pretty good APY as well, up to 15% on some of them, depending on what wallet you have them in. And if you think about what current percentage you're getting back on the money sitting in your bank account, I would be surprised if it was close to 15%. So they all have their own place within this ecosystem, and it can get more and more complicated the longer you stare at it. I just wanted to give an overview of why altcoins are important. It's not just a utility aspect of, we have 8,000 different cryptocurrencies that are 8,609 currently listed on CoinMarketCap. 8,609. They're not all transactional like Bitcoin. They're not all networks like Ethereum. They're not all supply chain like VeChain. Each one has its own specific function. There are probably about 50 in total that I believe are actually applicable and can scale and be useful if they develop correctly over time. All the rest of them, the jury's out, although I do believe that at least 8,400 of those are probably shit coins. But I'm excited to dive deeper into different altcoins with you. I did ask on my Instagram if you guys have any specific altcoins that you're familiar with or that you've heard mentioned in the past, and you want us to cover them. Leave a comment down below, and I'll make sure to bump them up the list and make a video on them sooner before I cover some of the other ones. So aside from that, thanks for joining us on this mind-melting episode of Viva La Coin, and I will see you next time.